The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading. You have markets in positive territory to kick things off this morning. Quite the volatility since Wednesday, right? You look at the CPI acceleration up to 41.73. Yesterday, we accelerate pretty much right where we were coming into that CPI number. Interesting, down to about 41.26. The moves are pretty fast. They're pretty furious. You make it up to 41.42. And then from about 2 p.m. Eastern Time, you trade from 41.24, almost a full percent. And where do you get back up to? The general area that this market has found a little bit of resistance the last couple of days. You were up there at almost 41.70 early Thursday. We were up there at a high this morning. 41.6450. We've backed off a bit. 41.55 right now. Green across the board. NASDAQ 100 barely in the positive, but in the green, up 18. You got the Dow right now up 0.3%. You got the Russell up by 0.25%. Bitcoin negative by about 1.5%. Bitcoin continuing to struggle a bit. You got crude. We almost were heading towards a 69 handle. We're back at 71.38, positive by 51 pennies on crude. Gold up by $3. Check out the volatility this morning on gold. Gold spiking from about 2005 in the early session up to 2024. Anytime you see some action in the gold contract, you got to take a look at the dollar index. Little bit of weakening, but nothing too dramatic in terms of what you're hitting in the dollar index right now. You jump over to the US dollar yen. A little bit of movement as well. But yeah, all things considered, not too dramatic of a move to have that type of action in gold right now. And you take a look at this dollar index. We've been talking about it. Boy, folks, the easy way to talk about things is to say, you know, the Fed's probably reaching a point that they're going to pause, and that would lead to a decreasing yield. The Fed pauses. Interest rates potentially are going to start coming down in the next 6 months as they potentially cut. That's going to cause a lower yield in the United States. A lower yield in the United States is going to mean less people need dollars. If there's less demand for dollar currency, that dollar currency is going to get weakened. So yes, you could say, man, the Fed, they're coming towards the end of their hiking cycle. You know, that could cause some weakness in the dollar. The only thing I'd say is that the dollar's already traded from 115 to 102, man. Okay, if you were pushing highs, I'd say, of course it's going to weaken. The market gets ahead of it by 3 or 6 months, folks. Okay, the market gets ahead of things by 3 or 6 months. Where are we? We're about 6 months after when the dollar peaked. Okay, so maybe it got a little bit ahead of itself. I would not think that it's a guarantee, man, that this dollar tanks, considering we've already moved from 115 to 102. Now, the other side of that equation is you put this thing on a longer-term chart, okay, to give you a little bit of the bear case. And boy, you go back to 2002, you go back to 2003, and we're sitting at basically highs in the dollar. Yeah, you got quite a spike during the pandemic, but look where we are. Okay, we're still sitting above 102. And for the better part of the last 20 years, the dollar index is traded under 100. So that's the other side of that. What's going to matter? Inflation is going to matter. Okay, let's finish the roundup. We jump to the 10-year right now. Boy, longer term, quite the chart, right? Quite the chart indeed. Now, interesting as I bring it up here, okay? Now, this chart doesn't go quite as far back as the dollar index, but nonetheless, you do take a look. And you could say, well, geez, dollar has been so much weaker over the better part of the last 20 years. And then you could say in the same respect, well, geez, yields have been what? Yields have been so much lower than they are right now for the last 20 years. So you put these two charts in correlation, okay? I don't think we're going to stick where we are for a while, but the 10-year right now, okay? The 10-year is not in some bonkers territory, folks. The 10-year is trading under 3.4% yield. So if you think the dollar is going to tank, that means that you're looking for yields to get crushed back into somewhere of this range, right? I'm going to back it out again. But it is cool pulling these charts up back to back, because if we do see the 10-year price rise, that would mean that yields are dropping. And if that does happen, you put that chart back onto the dollar, yeah, you might see some dollar weakness when you put those two charts together, giving you the whole case for sure. We jump over to the VIX, volatility index right now, sitting at a level of 1665. We put it back to a short-term time frame. Pretty resilient market going on right now as we chop around in this market with the S&Ps up by 11 points right now. You take a look at the daily. Let's take that Fibonacci off just to create some clarity. You can't deny this is an area of resistance, folks. We're bumping up against it. We've been bumping up against it, man. You put that 3-year weekly on things, right? I've talked about it many times, but an area of support back when the Fed started hiking has now turned into potentially an area of resistance at 4,200. Pretty amazing that it is the area that the market sat at right as the Fed began to hike. We got a bid initially, so they start hiking. We accelerate to 4,600. They stop hiking. And we're sitting at 4,200. We're just under that level right now. It's going to be an interesting scenario as it plays out. All right, jumping around some of the headlines I had pulled up this morning. I just found them interesting, to say the least, okay? And this is talking about, so it's just normal stuff, folks, okay? The Fed needs more hikes if inflation and labor stay hot. Of course it does. You better keep that scenario in your possibilities of things to play out, okay? And this is just one person, okay? But you better believe that there's a lot of volatility that could play out here, okay? Of course the Fed may need more hikes when we have core CPI sitting at 5.5%, folks, okay? Let me say it again. Core CPI, the last reading we got, which was 48 hours ago, was sitting at 5.5%. A lot of people make a reasonable case that we're about to see the lags catch up and we're about to see those numbers decrease. Very reasonable cases. Does that mean it's going to happen? I have no idea. You have no idea. You better make sure you're playing out scenarios where you acknowledge there is not a 100% probability that that's how things are going to go. Okay, headlines like this, they make me scratch my head a bit because I say, and I love Bloomberg, man, but it's just such a normal thing. It's amazing that statements like this make headlines. That's a better way to say it, okay? It's amazing that saying, hey, we got core CPI at 5.5%. If labor stays hot, we're going to have to hike more. Of course we are. Market's getting ahead of itself, okay? And the market is getting ahead of itself because it is predicated on the fact that the lags are going to catch up and inflation is going to accelerate lower. You have to keep that in mind. Okay, the long pause and the cuts that are to follow are not predicated on the numbers that we are getting right now. There is going to be a lot of pressure on these numbers as we go forward to show the impact that they're hoping. Hoping. Yeah, you could say that they're theorizing, that they're anticipating. Okay, but nonetheless, they're just looking at numbers. They're looking at the same numbers you and I are looking at, and they're making assumptions on those numbers. And if those assumptions do not play out, of course, hikes are possible, folks. Unemployment's at 3.4%. The market's sitting at a level that we were at in June of 2021 after a 13-year bull run, right? So keep this all in mind in context because I see headlines like that, and I say, you better believe that the Fed needs more hikes if everything stays hot. There's a big F in it. There's a big if in everything right now because there's so much riding on all the data. And the best part about being a trader, folks, is that means volatility. Stay tuned, folks. We got a lot to talk about. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got markets in positive territory, and we got to jump over to Tesla. Twitter, not a public company. Tesla, a public company, and reacting to the news that Twitter might have a new CEO. Investors liking the fact that their CEO going to have some time to pay attention to Tesla. Tesla's going to open up about $6. Excuse me, going to open up about $4. Yes, $4. About 2.5% pop for Tesla. And boy, it's been quite a run, man. I think he started going after Twitter. Let me see, because I can remember that what happened was yeah, I know. This is where, folks, pay attention to this one, man. You want to learn a quick lesson, okay? April 1st to April 4th last year, so just over a year ago, which is remarkable. It's been that, what a quick year, man. Remember when Elon started talking about that he was going to buy Twitter? That was over a year ago. Okay, and someone correct me if I'm wrong with the data, but I'm fairly certain because the way this played out, I remember being like, what's going on with this chart? This doesn't quite make sense. How's that happening? And what happened was the news came out between April 1st and April 4th over the weekend that Elon was going after Twitter. Maybe he was going to buy him. Okay, I think that's when it came out, maybe that he publicized that he had the actual position. Remember that he had taken on a 9%, 12%, whatever it was, position in Twitter. And I remember that Monday, the stock Tesla accelerated higher. I remember thinking, why would you ever want to buy Tesla when you find out that their CEO, Elon, who's got his hands in a lot more than just Tesla, is now going to be distracted to an extreme degree of this venture, right? And what happened? The stock accelerated higher on Monday from 363, made it up to 383, closed at 381, and then within 2 days, it was at 340. Yeah. Point being, you had a whole day to say, hey, man, Tesla's sitting at 375. Maybe I want to give this thing a couple months to see what happens with this whole Twitter deal. Maybe you want to give yourself an entire year, right? Because nonetheless, that was the start of quite a slide. You accelerated the 300. The real collapse began in September. And now, yes, the market accelerated lower over that time as well, okay? But focus on those days, man. There's an absolutely remarkable acceleration on April 4th of last year, on the Monday of that news. It kind of speaks to trust yourself, folks, because if you looked at that day, right, I remember, now I had no Tesla, but I remember thinking, even to myself, saying, man, I don't know what's going on. You know, I would have said, hey, you got to sell Tesla right now. Why would you be buying Tesla when it comes out that Elon's out there purchasing shares to Twitter, and he might be going after a hostile takeover for Twitter? And I found myself saying, geez, you know, maybe I just don't understand the dynamics of what's happening here, because I can't understand it, but the market's never wrong and the market's going up. And who am I to think that you would judge Elon for going after Twitter and say how that would hurt Tesla? No, folks, that was it. It was that reasonable. Okay, he was going to be distracted. The market paid attention. There were other forces in play, but pay attention, because that news was April 4th. You had a day to get out. Even if you got out the next day when the slide began, you got out at somewhere about 364. You would have saved 10% just over the next 4 days on that equity. So listen to yourself sometimes when you're speaking reasonably to yourself. In the same way, you could have made the same case when people were parking tens of billions of dollars for long-term maturity at 1.6%. I mean, can you imagine being in the room for Silicon Valley Bank? And can you imagine, now they had no risk officer, so that's part of the equation, okay? But can you imagine being in that room when they say, listen, man, we just got more deposits than we'll probably ever get, right? Tech stocks are blowing up. You have all of these growth companies. You have all of these early stage seed companies. Their valuations are blowing up. They've all secured all their funding. They got all this funding. They got to park it in the bank. Our deposits are growing rapidly. What are we going to do with this money to make money as a bank? And the CEO says, we're going to put it in long-term maturities at 1.6%. And somebody says, what happens if those companies want their money back and interest rates go up? He says, don't worry about that, right? Listen to yourself. Realize the risks in play, okay? Because sometimes some of the stuff coming out right now, it's just so reasonable. And you look at something like Tesla. Nonetheless, we digress, but it's Friday. We don't have a lot of earnings right now. The market's trickling up. We're so used to all this rapid fundamental news, right? We're coming off, last Friday was the jobs number, right? We're coming off CPI. We're coming off PPI. Have a great one, Jimmy. Appreciate you, man. Have a great Friday, man. And today, it feels like we're in a vacuum because we don't have all that economic data because it's so important right now. But it's Friday in the markets. We'll see where we go from there. Let's check how Disney's doing, because Disney, quite a day yesterday. On the drop-off, we're chopping around at $92, man. The one thing I will say, longer term, okay? Number one, you're back at pandemic lows, okay? Now, pandemic lows on Disney, and disregard a lot of this analysis down here, but the pandemic lows on Disney, okay, was when, you know, parks didn't exist, movie theaters didn't exist, and you take this thing back even longer term, folks, okay? Now, with the market sitting at 4,200, you got to say this for everything. If you're given a bull case for any equity right now, realize that I see a lot more risk to the downside in this market right now. We had a great earnings season, man, for the tech companies. They really weather things well, and they control so much of what this market's doing, the influence they have on this market. But if you start to see some weakening in this economy, man, again, core CPI at 5.5%, you start seeing some weakening in this economy, and you might have to bring that number down. Everything's going to pay the price, okay? So I'm not saying load up the boat on anything right now. When you get the S&P sitting at 4,200, 10% is an easy pullback, man. 20% is nothing to get, you know, don't deny the possibility of that occurring. But back to Disney, okay? This thing trades from about $30 to $120 over the period of 2011 to 2015. And since then, we're now chopping around at those numbers. And where are you back to? You're back to literally the break into this consolidation area that happened in February of 2015 when you accelerated higher. You back things up to where we were coming into Disney Plus. Disney came into Disney Plus at 111, okay? You came into the pandemic at 153. Longer term, folks, getting into Disney when it's at prices that you were trading at in 2014, 9 years later, there's no other Disney in the longer term. I was listening to a great analysis yesterday, and I'm a bull. I have Disney in my retirement account, okay? But I'm not selling it, folks, okay? There's the way that they can profit. I see it myself with children, all right? Tommy was watching Mickey Mouse Clubhouse earlier this morning. We had an early morning, man. We were up about 6 in the morning. We already did bath time. We had some yogurt. We were playing. And we watched a little bit of Mickey Mouse Clubhouse. It's remarkable when you look at how, for instance, I've talked about it before, Cars, the movie Cars, the number of cars that we have, the amount of money that I have spent on Cars memorabilia And it's great, man. They got these little cars. Grandpa's spent some money on them as well. It's amazing when you look at how they're able to monetize those characters, right? We got Disney characters, man. We got Lightning McQueen. We got everybody from basically the Cars franchises. So you see how they're able to profit. They can almost run Disney Plus as a loss leader. And I'm not saying that, okay? And Disney won't be saying that either, because they won't get any love from the markets if they start saying they're going to lose money forever as a leader. They're not going to do that. That's not the plan that they're putting out. But when you look at how tough competition is in that market, and you look at the ability and the franchises they own, they got more Star Wars movies coming down the line, man. And that acceleration you had in 2019, that was from Disney pushing out a lineup of movies. I'm going to have to pull it out, because I think they had 8 or 10 movies that all grossed $1 billion in 2019. We got some more Star Wars movies coming for the first time in a while. Stay tuned, folks. We're coming back for the open.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You got an S&P up by 11 points right now. All the markets in the green. We jump over to crude. Up by 54 pennies, chopping around 71.41. We got some action in gold going on right now, right? Gold up to 2022. Talk about some volatility on Fridays, man. Last Friday, boy, we had a 2061 coming into the evening, and then you fell from about 2060 on last Friday down about $50 to 2010. Where do we bounce this morning? Folks, you can't tell me technicals don't matter. Okay, where do we bounce this morning? You better have had last Friday's low on your chart if you were short gold or if you were looking for an opportunity to buy it short term, I'm talking about, okay? Maybe intraday. Short term, you got to look for that area, man. Look at that acceleration on Friday. Whether you're looking at volume or not, you can't deny, man, that thing just pegs that acceleration we had. Let's back things up a little bit further, okay? That's the area of Friday. Next stop, 1990 in the gold contract. But no, we stopped at about the 2010 area, which is right where we stopped last Friday. And yeah, we'll see where we go from there for the gold contract. We jump back to some of the equities in focus this morning. Tesla shares catches a bid, but gives some of it back, up by 1.7%. Quite a run for Google, right? The last couple days. It was really, you had the run up on Wednesday, accelerated higher on Thursday on their conference. Yeah, I was talking to my dad about this one a little bit yesterday. I mean, you just went up, almost 10% from where we were on Tuesday on Google shares. This thing's taking it on the chin a bit. Okay, you're down from 152. You came into that acceleration this week at about 105. Now, let's back this up a little further, okay? What's so interesting is how all of these markets have moved. We're now, if this is ever an A to B, C to D, right? You get Google shares go from $50 the pandemic low to 150. We'll call it the pandemic high. You trade right to the 618. You chop around in that area on Google for 5 solid months. You bounce off that area in March. We're accelerating past the 382 area, and that's 100-point A to B, C to D, folks, and that would bring Google to $190, man. You talk about some huge formations, but we just traded up $27 since March, and so you're only talking about another $70 that could take some time there. Not saying it's going to happen, but longer term, again, there's nothing like YouTube right now, folks. I'm telling you. I talked about it in my program yesterday if you were watching it. Okay, YouTube, over the last 6 months alone, has increased their share of television time watched. I'm going to have to find the article, get to the exact ones, because it's something like they went from about a 6.6% market share to a 7.5% market share. They went up 0.9% in the last 6 months, which is an astounding growth rate when you think about how long YouTube has been around. Okay, and they also now are above Netflix. So Netflix controls about 7.3% of the time spent watching TV, 7.3%. Google used to be at 6.5. They're now at like 7.4 in the last 6 months. And they're above all the streamers, okay? And Netflix is actually on the way down. So there is really something special about YouTube, I think, for so many of us. I mean, even the Tiger's Den, right? Number one, we stream Tiger TV through YouTube, okay? So we're biased there. I use YouTube all the time myself, as whether you're just watching programs you enjoy, maybe you're watching interviews, online YouTube interviews, maybe you're watching some influencers you enjoy. I watch a lot of stuff for do-it-yourself at home, right? You're changing a disposal, you're changing a kitchen sink, you're changing a bathroom shower. Very beneficial. You can watch the entire thing on YouTube. And then you get into the kids, though, okay? Because I look at in our household, right? Tommy loves YouTube. Now, we push him towards learning science type programs, but he loves YouTube. We have a 6-year-old in the house, loves YouTube as well. He's morphing a bit. But it is interesting because we have Netflix. They watch some shows on Netflix. We have Disney, which they love, and we also have HBO. And HBO has some great programs as well because they have Sesame Street, okay, which we love. Tommy loves Elmo as well. But to watch every facet of our household, every generation of the household, okay, watching YouTube, there's your mega bull case. Because maybe YouTube is just completely undervalued. Maybe it is. Maybe they're about to corner the television market in terms of they basically provide the flat platform for anybody to have a television show. And then they sell the ads and they revenue share. That's quite a revenue share platform, and there's only one YouTube out there. The other side of that, though, is they are on the cusp of losing their monopoly in internet search. My dad and I were talking about this, talking about Bard, right, and how they're going to integrate it into Google, and they are spending so much money on AI, folks. They're going to be around, okay? But when you look at how much money they make by cornering 90+% of the search market on the internet, even if they go down to 70%, that's a staggering amount of loss. So there's going to be a dichotomy there going on for Google for some time. But this week catches a little bit of a rebound. We talked to the other side of that conversation. Microsoft, there's a long-term chart for you. Let's take it back. Let's look at it on even a 5-year weekly. And you know what? Let's do the same thing for Microsoft. Let's see what we're dealing with in terms of, because we just looked at, yeah, so close. All of these equities, man. So look at this, right? How do they all do it? How do they all do it in terms of, you have the NASDAQ 100 come back to the 618. You had Google come back to the 618. You had Microsoft come back to the 618. Exactly. Now, the Microsoft A to B, C to D is about 210. And if you add that on to your C point, you're talking about $430, which would bring it above about $80 above the high. And so you're talking about what, 20% plus above the high. I mean, they're magnificent moves, but Microsoft just moved $90 since January 9th. Another $90 will bring this thing up to 400, right? Crazy stuff. And they delivered, man. They delivered. Microsoft especially delivered. When you're talking about the tech company earnings, we jump over to Amazon shares this morning. Now, Amazon, we've talked about this as well. Amazon, so strong this week when we've even had some market weakness, right? Amazon from 106 early Wednesday to 112, 113 right yesterday. Maybe the market's paying attention to what I was talking about, man. Amazon's a powerhouse, okay? Now, AWS is slowing. Without a doubt. Let's do the same conversation for Amazon, because that's a different story. Yeah, we don't even have to do it. I don't need a Fibonacci chart to tell me that we are back at pandemic lows is what you pulled back. There was no 618 retracement, man. Absolutely remarkable. You give back the entire move up from the pandemic lows to 188 to $80. You're sitting at 112. What I don't think enough people are talking about is that Amazon, I think their advertising segment is approaching $10 billion, and that's growing about 18%. And their seller services segment, seller services, is like $29 billion. $29 billion, and that's growing at 18%. Yeah, excuse me. Advertising is about $10 billion, growing at like 21%. And then you got seller services at almost $30 billion, growing at about 18%. You equate that to AWS, folks. AWS is at about 20 billion, maybe 21, and they were growing at 16%. And what freaked everybody out is on the conference call, they said in April they're growing at only 11%. Well, seller services, $30 billion growing at 18%. Stay tuned, folks. Markets up by 10. We'll be right back after the break.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets basically where we kicked off the program. S&P's up by about 12 points right now. Pac West, so they're in focus, and they're up by 3% today, but I'm going to pull up this chart on a longer-term basis, man. We've been looking at some longer-term charts today, right? Do you see any optimism in that chart when you put Pac West on a weekly, folks? Forget about the pops we've seen in this equity. You're up 3% today. Stay away from this equity. You're chopping around where you fell apart basically on Thursday night again, let alone we were up at 817 last Monday. You were at 352. Again, a little bit of a bigger picture smells absolute demise on these equities, okay? And what does that mean? That means that volatility in general is going to persist, man, because you know, you look at something like Western Alliance. Very hard to get some strength out of that market, man. Yeah, you make a double bottom, right? You accelerate at the beginning of things, March 13th. You drive right down back at that level again on May 1st. Well, folks, the news on Pac West yesterday, pretty sure the writing's on the wall. Maybe they're just trying to make it through today, okay? I was joking at the beginning of the program yesterday. God bless who's ever buying this equity from $4.20 up to $5. You better have sold it, because if you didn't, man, it didn't hold that level long yesterday. Once people are taking 10% of deposits out in a week, folks, who's the other 90%, and how long is it going to take them to wake up and say, why do I have my money there? And that's going to provide volatility that's going to persist in the markets in general over time. You know, I mean, you take a look. It's pretty simple. Pac West stock decline indicates bank fears persist. We're covering all the bases on very reasonable, obvious headlines today, right? If inflation remains hot, the Fed may need to hike more. Yes. Pac West collapsing and losing 10% of their deposits in a week means the banking crisis is not over. Yes, you better know that one as well, folks, man. Let's check out the big banks. JP Morgan gives up some of the gains it had pre-market. You're down about 0.4% right now. Bank of America. Yeah, they trade a little bit lower. Let's see how some of the airlines are trading right now. Quite the sell-off on Wednesday. United up about 0.7. We've taken a look at JetBlue recently, up a little bit with the market today. Take a look at Boeing shares. They had quite the order, I think it was on Tuesday. They had that acceleration, selling all those jets to Ryanair. That's as much as, how much was that, $40 billion or something like that? Quite the sale when you're selling 737 MAX planes. All right, what else we got pulled up? Let's jump around. Let's see how some of the equities are moving. Stocks making the moves right now. We talked about Pac West. Yeah, we talked about Tesla. JD.com. We'll take a look at JD. They had their numbers Thursday. They get back some of the gains off 3.5% right now. Yeah, earnings and revenue were above analyst estimate, but it's a current leader is going to step down in June for JD. So they're giving up those gains, man. You want volatility? There's some volatility for you, but check out that longer-term chart, right? I don't know. I mean, maybe you put your stop in place, man, because you're talking about JD down from 107. You want to see something wild? Yeah, you put this thing on a longer-term chart. Can you imagine telling somebody that you would have invested in China in 2015, and by 2013 you had made no money? Think about the growth going on, right? But that's the case in JD. So, you know, I bring this back because you take a look at these things on a 3-year weekly, say, man, that's not bad. That's not bad. We got a potential double bottom here, and you'd be correct. We do have a potential double bottom here. You made that low in October. We're back down at that low. Maybe we're building a little cup formation, and we're going to go up on the upward boundary. But be careful, because you put this thing longer term, and you break back into this area, and maybe we're going to chop around between 18 and 35 again for some time, because do not underestimate the geopolitical tensions going on, man. You heard Buffett out there talking about Taiwan Semiconductor, right? He had nothing but good things to say about Taiwan Semiconductor, the way it was run. I was listening to it, and I was trying to figure out even myself. I said, maybe I have a little bit more gamble than Buffett, and maybe I take a small position, right, put it into Taiwan Semi, because what he was saying was he invested in Taiwan Semiconductor because they have such a strong leadership team, right? They make chips, everything good about the company. But the one disclaimer was the geopolitical tension that's going on and the possibility for things to really ratchet up between China and Taiwan. And you better believe that, folks. Okay? So when you look at what's going on with companies like JD, Alibaba, for instance, right? Alibaba downtrend channel from 320, you make a low of $58. You could make the similar case here that you're challenging an area outside of that brief 2-week period. You hit 58. Alibaba, you're at kind of a technical low here of about $80. $75 to $80 has been the technical low. You had a little bit of an outlier. But again, you go back longer term, and you're barely where this thing was in 2014 at a time when geopolitical tensions could be ratcheting up. So be careful, man. Doesn't mean you can't trade them, okay? It doesn't mean there might get some huge accelerations to the upside, but just be aware of the risks that come with it. Because, as I like to say, the probability that things really ratchet up between China and Taiwan in the near future is well above zero. And I just like to say, if the probability is greater than zero, man, if the probability is greater than zero, you better believe it's possible, folks. Because what I think, and we'll take 2 minutes here, but I've talked about this before, and you got to think in the number of large numbers, okay? And if you're not familiar, I played a tremendous amount of online poker going back to basically the 2000s. Graduated from college in 2002. I think Moneymaker won the World Series of Poker. I'll have to pull it up. Maybe 2002, 2001. Online poker blew up right as I was about 22 years old. So my friends and I would get together, would be hanging out on the weekend or after work, would all get together, would be hanging out. Somebody would have a laptop. They'd open it up and would all share in a $5 tournament on poker. Okay, that's how I got started. So we all basically throw in $1, right? We're hanging out. We're playing a $5 tournament. It's got a bunch of people. And that's how we got introduced to it. Fast forward 5-10 years or so, and I'm playing cash games. You're playing tournaments. There was a lot more money in the online sites. Now, I got a glimpse of how overseas unregulated exchanges, how you should approach them. It's only in their best interest not to take everybody's money if they're actually making enough money from the business, right? Because you got no regulations, man. And one of the companies, Full Tilt Poker, which was a huge poker site, ended up being somewhat of a Ponzi scheme, probably similar to FTX, right? It always happens. That's why there's, no matter how much you think regulations are bad, when you talk about financial institutions like this. So thankfully, I knew enough at the time not to have any money on Full Tilt because the service was horrible and you have to trust these people. But back to the law of numbers, okay? When I was really playing a lot of poker, I would play 20 tables up to 24 tables. That's what they allowed you to play on PokerStars. The maximum you could be playing was 24 at a time. I had 2 very large monitors, much like I do now, but this is going back 15 years ago right now. And what would happen was I was playing about 1,000 hands an hour, okay? Because I'm playing, when you're playing online, you're playing about 40 to 50 hands an hour. Yeah. Yes, so you're playing 20 tables. That's about 1,000 hands an hour, right? You're playing 50 hands an hour. Online is much faster than when you're in a casino. So I'm playing 1,000 hands an hour. You play a 5-hour session, I'm playing 5,000 hands. When you're trading, folks, okay, you wouldn't believe when you just go out a year or two how many times you're going to run the same scenario. Okay, so it's very easy to say, and we're going to finish this up when I get back, because big picture, I don't think a lot of people approach odds in the way they should, especially when you talk about tail risks to a certain degree. So we'll finish this conversation up. S&P's given up some of the gains. We're up by 6 right now, 41.49. NASDAQ 100 hanging on by 1 point. Stay tuned, folks. We're going to be talking a little bit of probabilities when we get back. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&P is up by 11 right now, pretty much where we kicked off the program, right? Since about 8:30, we've had about 41.55. You dive lower briefly in the last 10 minutes or so, and we reclaim those 5 points. So to get back to the conversation, right, about probability and about what poker taught me, because I was dealing in such large sample sizes, I was playing 5,000 hands in a 5-hour session. Maybe I'd play 2 of those a day. That could be your work day. You put in about 10,000 hands an hour. I was playing an extreme amount of hands, millions, over the course of a year. It starts to teach you that the 1 out of 10 probabilities happen all the time. So check this out. You even talk about a 1% probability of something occurring. Well, if I was playing 5,000 hands over a session, right, those 1% hands, those 1 out of 100s, that could potentially happen 50 times to me. 50. You're talking about a 1 out of 1,000, 1 out of a 1,000 scenario. Well, when you're playing 5,000 hands over the course of a session, you can run into those things 5 separate times. It teaches you the law of large numbers, man. Those things play out. If a probability can exist over 0, folks, it happens. When I was playing poker, okay, I've seen it all, because you've seen large numbers. Now, to apply this to the market, okay, would I take this for what it's worth here? People have the habit of thinking if something has a 10% chance of playing out, that it's not going to occur. And they're right, because most of the time, that's not going to occur. If something has less than a 10% chance of occurring, it's probably not going to occur. But let's just say a 10% chance. Let's say you're the one, you're selling premium, okay? You're selling out of the money puts and calls. Maybe you're collecting 90 cents on the dollar, and you say, you know what, man, the market's got to move 1 to 2% against me. That's usually not going to happen. I'm going to collect my 90 cents. And 90% probability, that's so high. It happens all the time. You make 2 of those trades a day, you're going to lose once a week, guaranteed. Are you prepared when you're basically risking 90 cents for the 10 cents of profit, right? You're collecting 10 cents of premium, I should say, and you're risking the 90. You make a couple of those trades a day, you're going to lose once a week. So factor those big numbers into your probabilities, man, because they happen all the time. And yeah, we'll leave it at that for today. Folks, thanks so much for starting your Friday off with me. Stay tuned. Our man Basil Chapman's out, but we got Steve Rhodes coming up live at 11 o'clock. Fast Market at 12. Larry live at 1. And we got live after that. Thanks so much, folks. Markets in positive territory. Stay tuned, folks. Steve's coming up at 11.